the ASX 20, 50, 100, as well as the S&P 100. Includes our ASX and US high conviction portfolios, which pick up the ideas expressed on the blog and in these recordings. And within that, we operate an independent portfolio where we work in partnership with you to execute ideas we jointly agree on, and we can utilise derivatives to enhance portfolio returns. If you'd like to know more about the broking account service, please contact me on 1300 614 002. The technology that I'm using tonight is the Investor Signals member area. You can subscribe to it for $1,320 for the year. If you haven't had a free trial, or if you'd need to reactivate an existing free trial, please either visit the website or give me a call on 1300 614 002. The graph that we look, or the table that we looked at last week, related to the earnings, and I'll just skip through to what we focused on that was of most importance, which is the trend between Q2 earnings, which is the S&P 500 average earnings for the June quarter, compared to what it ends up being in the September quarter. And you can see here that the market's forecasting a 20% acceleration in earnings into the September quarter. So in that first week of October, if we start to see the earnings come through and they're not delivering that 20% growth, combined with maybe Biden leading in the polls, we could sort of start to set up an area that continues to put downside risk on the market, especially in the context of these high PE valuations. And I've put some of them together here for you, where stocks are trading at 100 times or 70 times earnings, 150 times earnings. By any measure, these numbers are stretched. And despite some of the companies offering good growth rates, are we at an area where these valuations are starting to be questioned? And we've seen the early start of that selling in the Nasdaq. So if we look at the Nasdaq over a long-term period, you can see here, this was the 2000 bubble, if you like, and then where we're sitting today. So again, you're paying 70 times or 150 times earnings for stock just seems like too much of a stretch. This is the volatility index, which shows that just over the last week or so we've seen volatility pick up, and we'd expect to see that continue to move higher. Gold has formed a base there at around 1250, and whilst it too is starting to get a little expensive, I think with volatility picking up gold, there's still an opportunity there, and we'll look at those tonight. The Investor Signals website, if you haven't visited the site, log on there. You can access a free trial to the member area, learn more about our research or our broking account, or call the office on the 1300 number, and happy to answer any questions you got. Up on screen's a graph of the Nasdaq. So the concern here, and we've been waiting for some time for a break in that sort of sentiment, that bullish sentiment that's been driving the Nasdaq higher, and we've now got the close below the average. So you want to be sitting with some short exposure in your portfolio and a switch to defensive names. So exposure to gold, exposure to consumer staples, exposure to healthcare, and you should be running some type of short exposure at an index level as a hedge to your portfolio. So now what we do is continue to watch over the weeks ahead. In the past, this rally, we've had sort of only 1 or 2 days below the average, and then it's rallied back above it. But it may be that we're on the cusp of a more material correction in the market, and whether that takes weeks or months to play out, but you're starting to see investors question the valuations that, in particular, that are assigned to these high growth companies. It's less of an issue if a company's got supportive earnings and the dividend yield's attractive, and just taking something like Woolworths or Coles. So the risk to that area of the market is that if interest rates start to spike, which would be, the catalyst would be an increase in inflation. So we haven't seen really inflation as an issue in financial markets for a long period of time, almost decades. So it's hard to see that we're on the cusp of that breaking out, but you actually are beginning to see the yield on the 10-year treasuries in the US start to move a little bit higher. So we continue to watch that, but we don't see that as a critical issue as much as we do simply a valuation adjustment in the market, and that's a point where investors just focus more on fundamentals rather than purely momentum. So at the moment, Nasdaq underneath the moving average, and that's a really important sort of point to think about in the context of your portfolio construction at the moment. So tonight we'll go into the ASX 100. We're going to organise it in percentage gains for today. We're going to get them in buy order, so as I toggle through these, we'll be looking at the stocks that are under buy conditions, and then we'll get a point in the list where they switch from buy conditions to sell. So the first one in the list, Virgin. This is the Clydesdale Bank out of NAB that was spun out, which merged with Virgin. And we continue to monitor this. There's some just concern as to what the bad and doubtful debt situation looks like, so I continue to sort of monitor the news flow and on that. But it's an interesting longer term story, but the risks are maybe a little too high for us to look at that in this current environment. TPG, we'd been waiting for this to pull back below $8, so I think at around this 750 again, it provides a low risk entry opportunity. Not doing it there in Flight Centre. Fortescue, gone ex-dividend, support should be there at around that $17. We expect iron ore to remain close to sort of that, at least within that 100 to 130 range. Alumina finding support off 150 there. Westpac, it is the only bank in our top 20 portfolio, but again, have a look at the BNKS, which is the global banks ETF. Still have some concerns as to the risks in the banking sector around bad and doubtful debts. So these gold stocks is an area where there's an opportunity in the market. Now, whether you play that through Northern Star, Gold Road Resources, or through Newcrest or Saracen for that matter, probably in an order of preference, our is Newcrest and then Gold Roads, but certainly Northern Star here at around $13. Most of the gold stocks are in a similar position where they're now under algorithm buy conditions. The short-term indicators are oversold, and we're just in the early stages of where they're likely to find support and start moving higher. So it's a similar pattern there, as you can see there in Newcrest. So we see that supported around that $30 level, indicators in oversold, and we're expecting sort of this higher high and this higher low structure here to actually find support and see another rally higher in the gold stocks. Next, DC, even though this is under buy conditions, we're cautious on that name. It's been, if we just jump back, it was originally sort of flagged there as a buy signal at 650. It's rallied substantially since then, but as I've been talking about, there's some concerns around the reporting in the financials. And after looking at it a little bit closer, so to give you an idea, NextDC delivered about $170 million of revenue last year. This year it increased to 200 million. They're forecasting that to grow to 240, 250 million in the next 12 months. But when you look at their accounting treatment, on a cash basis, the company was not profitable. It's only after depreciation and amortization that they get to a profitable position. So again, it's another example of where the high PE in the market may be called into question around NextDC, but we continue to watch with interest that top line revenue growth and just keep an eye on on the accounting treatment of the difference between their actually true profit and their EBITDA profit. Orica support there around $17, and we expect that to hold. We think sort of the exposure to the mining industry, which is holding up well, should bode well for Orica. So buy the dip there at around that $17. CSL buy the dip here at around 270, 280. Saracen again preference Newcrest, Gold Roads. A2 Milk delivering good earnings growth, high PE valuation, doesn't pay a dividend, so this is an area of the market where you're seeing a bit of a correction take place where there's a limit to what the market's willing to pay for growth names. But A2 Milk, top line revenue looked okay, the margins looked okay, so expect this to find some support pretty close to where we're trading at the moment. AusNet Services, we had owned this and taken profit on that, but as you can see, it's still under buy conditions, consolidating there at around that 185. QBE Insurance, it's in the model, but not a stock that we're really participating in an active way. Ramsay Healthcare, I like this. I think even in an environment where volatility picks up in the market, the 2% yield and defensive income stream there's attractive. So buy Ramsay between that $60 and $64. Coles has corrected now from $19 down to $17. So we've started accumulating Coles here, and if we were to see another day or 2 days of selling, especially if the broader US market was lower throughout the middle of this week, if you're able to pick Coles up at anywhere between that $16 to $17 range, it looks good value to us. Whether it really trades down to that 16 level, maybe not. So we've added at least half the exposure at the current price point. Beach should find support there around 140. Oil's been soft over the last day or two. Ansell, keep this one on your watch list. It's pulled back from say 42 back to 36 at around that $35 level. There'd be good buying. The short-term indicators are still moving lower, and it's now switched to buy condition, so we like the look of that. Brambles at around this 1050 to 1070. I think that's a buy on the dip there. APA Group, the pattern there. Quite often when you start to see that consolidation, you might get another spike lower, but I'd be a buyer of the dip there on APA. Cube Holdings now switched to buy conditions. I'll do a valuation review and update a post on the blog over the next day or two. Spark Infrastructure under buy conditions, should find support there around that $2 level. Now ResMed, add this one to your watch list. A pullback, we'd been waiting for this to trade down to around that 22.50 level as a target. The stock is expensive, 40 times earnings, although that valuation's starting to come down a little, but it is only paying a 1% dividend yield. But we have seen both the revenue and the profit growth slow, so I don't see why you'd be paying a premium at the moment for ResMed. So you just want to be patient and try to pick this up on a on a pullback, and maybe that is sort of closer to that $21 to $22 range as the ideal entry point there. ASX has gone ex-dividend. We like this business. We like the long-term fundamentals here, but again, it's expensive and we'd like to pick it up at lower levels. Dexus not doing there at the moment. JB Hi-Fi not doing there. Sonic Healthcare gone ex-dividend. Should grow earnings about 3%. Dividend yields getting up to around that 3% as well. So this old high here of around $31, somewhere between $30 to maybe even $32, we think that's a buying opportunity. It is expensive and the growth is slow, so I don't think that it re-accelerates back up and creates new highs, but should be well supported there at around $31. Sydney Airports, again, hard to get visibility as to when international travel recommences. But the rights issue has been well supported. The balance sheet seems to be in a reasonable position to get through the next 6 or 12 months. Afterpay, we're only interested in this on a more material pullback. NIB Holdings, we're avoiding these health insurers at the moment. Oz Minerals we like, but we want to buy it on a pullback. Rio and BHP have found buying support. A number of analysts have upgraded both BHP and Rio to buys given the recent pullback in price. We're more of the view that the probability of them creating new highs is relatively low, but we think there's reasonable buying support given the attractive dividend yield in both of these names at the moment. So we continue to hold them, but expect them to stay sort of range bound under that prior high. I'm not doing there in WiseTech at the moment. The banks, you're starting to see a little bit of buying interest in the banks globally as money's come out of these technology names, these overpriced, whether it's Tesla, Apple, Amazon, Facebook, etc. And you've seen some money rotate into the banks. I think it's far too early to tell whether that's actually the correct move in the market, and it may be that the technology area continues to correct, and with it ends up being a a further leg down in, whether it be the banks, industrial names where we've seen money rotate out of tech. So I'm not sure that there's really safe haven um, pockets in the market within that financial services space just yet. But again, I urge you to have a look at the BNKS ETF as a way of thinking about the bank exposure, and I'll update a post on the blog this week regarding that. Lendlease, we like the long-term story there, but obviously over the next 6-12 months, trading conditions excuse me, are going to be difficult for Lendlease. The stock has found support off that $11 level, but again, not sure that the catalysts are there in place to really cause it to rally too much from where it is at the moment. Challenger under sell conditions. Boral we think runs into resistance where it is there at the moment. NAB, we look to sell the rally in that. If we see it up retesting that $19, we'd likely look at that as an opportunity to put shorts back on again in NAB. Telstra oversold down here at $2.80. Could trade up to around that $3.10 level, which is a reasonable trade in this market. Crown Resorts and Star still cautious there. Suncorp cautious there. CBA, as with NAB, looks like the banks may rally for a few days, but it seems like there's maybe further bad news yet to play out in the banks, and we'll have more clarity on that over the months ahead. Oil search preference. Woodside looks cheap at $18-19, but Beach Petroleum is under buy conditions. South 32 preference clearly BHP, Rio, Fortescue over South 32, but it is oversold. The commodities that they mainly trade in are down anywhere from 40 to 50%. So maybe we see South 32 consolidate and trade sideways where it is. Insurance Australia Group oversold down here at around this 480 level, so if you're looking for a sort of counter trend trade in the market, just need to be a little bit cautious and run stop losses below that, but it is getting down at a level that looks cheap on valuation basis. Bank of Queensland avoiding the regional still, not doing there in Qantas. Star, again cautious on both Star and Crown for the time being, not doing in Treasury. Reliance, not doing there, nor in Soul Pattinson. Bendigo still cautious on the regionals. BlueScope up against resistance at around $13, downside pressure. Macquarie up against resistance at 130. Worley's up against resistance at around $10 there. Cochlear sold off from that sort of $220 level, so we're not doing there at the moment. Coca-Cola, the yield support there at around that $9 moves sideways, but still obviously the full economy hasn't reopened, so it's unlikely that Coca-Cola's going to really do well in this environment. But there is definite yield support there at around that $9 level. Iluka not doing there at the moment. Tabcorp, thinking that this looks like it's up against resistance where it is up at around that $3.50 to $4 level. AGL could be getting down to oversold levels there at around that $15 point. GPT, high quality office trust business, Sydney, Melbourne, tough trading conditions and little visibility on the current earnings impact. Incitec preference Orica over Incitec. REA Group, we like these technology names, but we do think they're expensive. If we do see the further selling in the Nasdaq, then look to buy REA, Car, Seek as examples of high quality technology plays, but just be patient and wait for the algorithm buy conditions. They're under sell signals at the moment, and we're looking for further downside before we add those into portfolios. Centre Group not there at the moment. Aristocrat, risks likely to be increasing there around the earnings. I'm surprised that that's holding up so well, but we'll continue to monitor that as the earnings results come through. Magellan not doing there at the moment. Altium flagged that it was running in a resistance around that $37 level. It's rolled over, it's under the average, and we're still sort of... Altium is a interesting long-term opportunity in the market, but given the weakness in that Nasdaq, we're just not willing to sort of buy into them at the moment. Goodman Group, 10% earnings growth. The development pipelines increased substantially. We like the story here, it's just expensive. So whether we get sort of a deeper sell-off from this current sort of rollover or resistance up here at around $18, would certainly be nice to see it back at around that $16 level, a switch to algorithm buy conditions, and then we would be adding it back into portfolios. Non-entertainment, not in there at the moment, nor in vicinity. Computershare resistance at $14. It's just hard to see that the earnings environment and low interest rate environment really supports Computershare. The company guided towards, I think, a further 10% fall in earnings over the next 12 months. So we'll continue to monitor that and follow, and any sort of trading updates that are provided, I'll snapshot and update you on the blog. Medibank Private, we've been cautious here on Medibank and NIB. Maybe from a valuation standpoint, Medibank's sold off now from $3 down to $2.50. Maybe we're getting down to a point here between this 240, 250 where Medibank starts to look interesting from a yield standpoint. But I do highlight that it's under algorithm sell conditions, or primary. So if you're joining us for the first time tonight, this is the primary algorithm signal, the red and green box. So for reference to being under sell conditions means that the most recent signals are red box. We often tie that in with what these shorter term arrows are doing. So where you see the red arrow line up with the red box, it's a good shorting opportunity. Now what this is saying is, from a shorter term momentum standpoint, this selling's probably starting to exhaust and we're getting pretty close to a turning point. The short term indicator there's down the bottom, so we may be getting to a point where this is oversold and we get a counter trend rally. So meaning a counter trend rally, meaning that the primary trend is still down, so the counter trend's just a move back up before it runs into resistance again. But just highlighting that that's starting to look a little bit oversold there in the case of Medibank. Xero rolling over again, quality company, great tech play, but expensive, and we would be looking for this to pull back to maybe around this 80 to say $85 level, and then a switch to an algorithm buy condition. AZJ's pulled down to our target there at around that 420. Again, starts to get a little bit of yield support there, and we're starting to see that shorter term momentum indicator turn positive there, or at least the green arrows showing, tying in with that valuation of around $4.25. The thinking there is that the cash flow looks pretty well supported and the dividend yield of around 4.5% is attractive. So again, the stock is under primary sell conditions, meaning the reference is the most recent signal there is the red box. We've had the red arrow, but that's selling from $5 down to $4.30s, maybe starting to exhaust a little there. Woodside Petroleum, so this looks oversold to me. So there's a couple of stocks, and I'll just rattle these off. So Woodside Petroleum, Telstra, Woolworths, Wesfarmers, ALD, which is the old Caltex, Aurora, and Medibank. They're all under primary sell conditions, but if you take a closer look at those charts, they appear to be getting down into oversold levels, and they're all reasonably high quality businesses with with stable fundamentals. James Hardie's running in resistance up there at around $32, and it's rolling over, so we're not doing there at the moment. Santos, again, we did own this at lower levels and we removed it from portfolios following that algorithm sell signal there, and so far that appears to have be working in our favour. Amcor, high quality business, defensive, so we like the opportunity here, but again highlight that it is under sell conditions, so we're thinking that it's up against resistance at around this $15 level. Maybe we see a retest of $14, but we largely see Amcor trading sideways. Car sales, within this technology basket, we think that this name comes under pressure. It has made a new high, which is a positive, but we'd like to see a correction back down to lower levels, maybe around $18, and a switch to buy conditions before we add that back in. Not doing there in Mirvac. Stockland up against resistance, looks to me that around that sort of $4 level. is going to be a tough level for Stocklands to trade back through. Downer EDI, still preference is CIMIC, although it's a bit of a concern the class action that's been drawn against CIMIC. So again, I'll focus on that on the blog and update you with a bit more detail on that. Woolworths under resistance there at around that $40 level. It's rolled over, but a little like I guess BHP, Rio, but albeit Woolworths and Coles are obviously consumer staples, defensive area of the market, offer reasonable dividend support. So even though it's under sell signals there, back down around this $37 level, should find support. Whether we sort of get back down and test this $35 level, we'll wait and see. But within the market, they look reasonably attractive to me. Domino's not doing there at the moment, just highlighted this broken out, created a higher high. If we see this roll over and back to algorithm buy conditions in the months ahead, I'll draw your attention to that on the blog. Wesfarmers, terrific business. We like sort of their growth opportunities within e-commerce across the portfolio of Catch, Officeworks, Bunnings. So it's certainly a buy on the dip. It's ran in a resistance at around this $50 level. If we see it switch back to buy conditions, which I'm sure we will do, it's just a matter of being patient, and we'd look to add that back into portfolios, but again at lower levels. Charter Hall not doing there at the moment, nor in Atlas. Seek, good quality business, but the last 6 months, or in particular the last 3 months of comments out of management, as I highlighted, they moved quickly to issue debt, cut dividends, and to me that's not the sign of a company in a strong position. So I think there's risks to Seek over the next 6 months of reporting that could miss guidance and come in below market expectations. So you just want to give that a bit of space and be willing to buy it on bad news over the next 6 months. ALS up against resistance there at around $9, and I think the risks are increasing to the downside there for ALS. Link not doing there at the moment. Cleanaway, great business, created the higher high, so the conditions are now in place for where the next sell-off may be back down to $2.10, $2.20. We'll see that shift back to buy conditions, and we'll add that back into the portfolios. Ampol, it's under sell conditions, and that's worked out to be correct. I had been flagging for a while there at around $30 was back at full value for Ampol. The earnings have come in softer than expected, but it is a quality business that's going to benefit from any normalisation or reopening of the Victorian economy, and just in some level of normalisation of business activity into the new year. So it's one to have a think about. Keep an eye on it, because buying into sort of a sell-off there in Ampol is unlikely to be met with too much headwinds over the next 12 months. AMP not doing there at the moment. CIMIC Group, not very often we buy stocks that are under sell conditions, so meaning that we don't buy a lot of companies where the primary signal there is a sell signal. The short-term momentum indicators showing that the sellings may be nearing a level of exhaustion. The issue here is around this class action, and as I mentioned, I'll update you with a bit more information on the blog regarding quantifying those risks for the company. But we still like the theme of exposure to government supported infrastructure spending, and CIMIC's one of the best ways to get exposure to that. Transurban, so we're looking for this to come back down and test maybe that 1250 to 1275 level, and that's just an assumption of where we see fair value based on the lower levels of dividends that are going to be paid out over the next 6 to 12 months. So whether we get back down there and test that, we'll wait and see, but certainly that's our ideal entry level. Origin, at around this $5 level. I think this is one that you can start to have a think about. Again, it is under sell conditions, so the primary momentum trade's been a short trade to the downside, but it is a quality business, and maybe around that $5 level is getting a little oversold. As with Aurora, so most of these are already moved substantially to the downside following the recent sell signals. And there we are, back to Virgin Money. So I just want to finish tonight with jumping into my custom watch list, which I've saved stocks that I'm interested in. So as I'm toggling through the charts and there's something that I want to add to the watch list, I simply go to the add list, hit custom, and it just sends it to the watch list without me having to type the code in. So I run 3 different watch lists, one for the Australian market, one for the US, and one for the indices. If we just have a quick toggle through the stocks that I've got in my watch list, and I'll speak briefly about the opportunities that I see here. So the ultra short Nasdaq, so this is a way of profiting from the Nasdaq falling. So you're probably already familiar with BBUS, which is the double short S&P, and likewise you may be familiar with BBOS, which is the double short XJO. So this is a new ETF that's been added to the ASX just in the last week or so, which is the ultra short Nasdaq. So this is a double short on the Nasdaq. So if the Nasdaq goes down by 1%, this will go up in value by 2%. So the recent sell-off in the Nasdaq, you've seen this rally from $7 to $8.45, and as long as the Nasdaq sits below that 10-day average, you should be having some hedge in place in your portfolio, and whether that's through BBUS, BBOS, or through this short Nasdaq, or SNAS is the code. TPG, I like that around that $7.70 level. Looks like it should find support. DGO Gold rallied off that recent buy signal there at around 280, but the opportunities missed there. BBUS, again, hold that as long as the Nasdaq sits below that average. Illumina, probably not my favourite opportunity in the market, but Illumina does look to be finding support around that 150. Bega, we traded this from this 450 level. The earnings result was actually in line with market consensus, but guidance was much better than expected, and the company's paid down the debt levels as well. So keep this on your watch list, and I think it's a definite buy on the dip story. It looks to be in the middle of a bit of a turnaround. Gold Road Resources, I think this is an opportunity for tomorrow or this week. Support that around that 150 level. We expect gold to rally. Technology One, flagged this on the blog. We're looking at this a bit closer. Out of the tech stocks, this has got a good track record of paying dividends, growing earnings. So it's one that happy to sort of pause and take a closer look at the fundamentals and continue to watch that. The short-term indicators there show that it's getting down into an oversold area, but obviously, not without its risk at the moment buying into technology given the backdrop in the Nasdaq. So Newcrest and Gold Roads are our preferred exposure at the moment. So Newcrest support at around that $30 level. Orica, like that off that $17 support level. CSL, I like this. I think you want to be buying that within that 260 to 280 range. The BetaShare Global Banks there, I've just put the support line in there at around 450. We did see some buying as money's rotated out of tech into banks. Whether there's actually any legs to that trade, we'll wait and see. You do run the risk that if the technology sector continues to deteriorate, you then get the capitulation in the other areas of the market that the market's perceiving as safe havens at the moment. So I'm mindful of those risks. A2 Milk, continue to watch this, but I'll update you on the blog. It looks to be finding support around there. Ramsay Healthcare, I like that because it appears a fairly safe harbour if volatility picks up. Medical Development International, this is just a stock that was brought to my attention. I haven't had a chance to research the fundamentals closely there, but I'll continue to update you via the blog there. Pro Medicus, I actually quite like the story here. The stock is expensive from a PE basis, but they have delivered on both the revenue and profit growth, and the contracts that they have with major US hospitals something that the company should be able to continue to build on over the years ahead. So buying that on the dip is a growth opportunity that's sort of fairly comfortable with relative to some of the other, I think, overpriced, higher risk growth opportunities in the market. Coles, seems like a low risk proposition, buying into this after the night sell off from $19, so between $16 to $17. So, Spider Global Dividend Fund, so it should find support there around that $14.50, $15 level. Ansell, add that to your watch list, and I'll comment on this on the blog over the coming days, but it's now under buy conditions. The short-term momentum indicators just need to find support there and move higher. Brambles around that 1050 to 1070. I like BBOS has found support there at around that, say, 770, but it's really a focus on the XJO, and we'll maybe finish off with a look at the XJO tonight. APA Group, if we see a spike below that 1040 level, I'd expect it to reverse on that day. So what you might see is a trade lower down towards that $10 and then a strong close, and you'd want to buy into that on that strong close. That'll be something I'll focus on the blog. Yank, so the Aussie dollar, if the US dollar rallies, does the Aussie come back, and if so, the Yank will benefit from that. The Vanguard Global Infrastructure, I've posted about this on the blog a few times, but I like this from a longer term opportunity in the market. I think over the next 6 or 12 months we're likely to see that 10% higher, and you're getting a dividend yield in the meantime. This is another ETF that's on the watch list for me, which is the iShares Global Healthcare, so keep an eye on that. Today was a fairly heavy day of selling. If we get down and maybe test that 95 level, I'll draw your attention to that on the blog. ASX, I've covered that, as with Sonic, but Sonic buying that on a dip is interesting. GDX, preference Newcrest and Gold Roads at the moment. This Cure ETF, been slow to turn, but I do think that there's a good opportunity here, over a 3 or 6 month view, and it may not take that long. We may be pretty close to the support level developing here, but the whole biotech sector in the US still looks like an area to me that money's likely to continue to flow into. Oceana Gold finding support now under buy conditions, short-term indicators starting to move higher, and then there we are back to Virgin. So just to finish tonight with a quick look at the graph of the XJO. We looked at resistance previously up at around 6,200. The main leading indicator remains the Nasdaq, so as long as the Nasdaq trades below that average, we're still cautious on the market and looking to only allocate money into sort of fairly safe opportunities in the market. So the gold names, Coles, so the consumer staples, TPG and telecommunication, Brambles. So continue to follow the daily blog to keep up to date with the specific ideas that we're focusing on from a timing standpoint, and if you'd like to discuss either our broking account service or just any of the ideas presented in tonight's recording, don't hesitate to give me a call on 1300 614 002. Thanks for listening in. I look forward to speaking again next week.